So accepting loss, right? That's what we're on right now. And understanding that you're not going to win everything and you're going to lose some of them as well. So it doesn't matter which one you lose. What matters is understanding that every risk taken on this trade at only 1%. That's all it is, guys. Only 1% on this trade. And that's why when I lose a trade, doesn't it means nothing. It means absolutely nothing. Because it is just 1%. It is what I planned to lose in the first place. So it is nothing. Because I know the next win is somewhere around the corner. Now, even if I lose all of this, and then happen to get maybe, let's say, 1 to 15 now. Just 15%. Even if I happen to lose all of this. Let's count this. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. This is 14% against 15%. So here you come out with a net win of 1%. Alright? Regardless, you're still profitable. Still profitable, guys. Still made 1%. Okay? Which the bank doesn't even give you in a year on your account. So you're even profitable than them. Understanding this. Okay? So understand the fact that losses will always happen. And you will never win every single trade. Okay? They will always happen. You will never win every single trade. You're going to lose at some point. But your losses are always small. And your wins will always be big as long as you're doing the right thing. Okay? As long as you're doing the right thing. This trading is just a game of numbers. Right? There's money, and money is just numbers. So you're learning how to grow your account. You're learning how to multiply a certain amount of number. So say, for example, in my bank account, in my trading account, I've got about $1,000, right? My job as a trader is to multiply that money to whatever I want. So say, for example, I'm always risking 1% of my account, which is $10, right? And I'm always risking $10 on every single trade. So for a series of 10 trades, why is this happening? I'm pretty sure you guys can see my screen, right? Okay, it's back now. So understanding that, let's say for example, I have a series of 10 trades. I have $1,000, and I'm only risking 1% of my account, which means I'm risking $10, right? I know that it only takes me, within these 10 trades, I know personally, based on my win rate, that I only need within the next 1 to the 5th trade before I become profitable. My profit, my gains within the next 5, I always say 5. 10 is even too much. So at this point, let's just say 5. So within a series of the next 5 trades, I know deep down that I can't lose 5 trades in a row. Right? Like if you know yourself, you know what you know. So I know deep down that I can't lose 5 trades in a row. I know that within those 5 trades, there's going to be 1 trade that's going to give me a win. Right? Now, if I lose the first trade, the second trade, third trade, it doesn't really matter because I know 1 win is within that area. Now, if I lose 4 trades out of 5 and win 1, and I know that that 1 is always going to be big because that's what the trading system allows you to do, because it allows you to reduce, have like 2 pips, 3 pips stop loss, and then even if it's a 30 pips take profit, that is still a 1 to 10 or a 1 to 15, right? And just within 4% loss, I'm still profitable. right? That would give you a net profit of 6% or 9% if it was 15, right? And I'm still profitable within the next 5 trades. So if I can compound that activity, right, over time. So say, for example, I keep taking the next 5 trades, and just lose 4 out of 5. But the one I win is always big, right? And I compound it. At some point, I will grow my account to 100%. Do you guys believe? Like, I'm not even shitting you. Like, this is something that happens, right? This is something that happens. Like, I'm not even kidding you guys. This is something that happens. So losses mean nothing at this point, right? They mean absolutely nothing. The only time losses means, do you know the only time when losses mean something? It means something when you've just over leveraged your account. That's when it means something. Because now you've just had a huge loss. That's when it starts to mean something. That's when you're starting to do crazy nonsense for yourself, and that's creating bad habits because you're not sticking to plan. You're not being disciplined enough to stick to plan. You're going out of plan. You're not getting to the right entries. You're not being patient enough to get to wait for a bigger structure. And that's why you're receiving those 1% losses, right? So, but understand still that a win is always around the corner. All right. It's always around the corner. Even if you're dumb as fuck, you will still win the trade. All right. So just understand that it's okay to lose. It's okay to lose, and losses are always small. Keep losses small, keep wins. If you keep losses small, your wins will eventually be big because they have no other thing to do than just be big, because your losses are small. So your wins will always be obvious, and you would have a profitable bank trading account. Okay, so that I think I've said too much about that. I'll talk about wins. Wins too are something that is important as well to actually reflect on. Okay, and the reason why I say this is because when you win the trade, you get excited. All right, and excitement is an emotion. And in trading, you understand that you should not trade the emotions. So at that point when you just want to trade, as a human being, every person, like trust me, every single trader who goes through a win, they all feel good about it. You feel good about yourself. Even when you say, even when we tell you or say rubbish, oh, you should, no emotions, blah, 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 blah. We're not robots. We're humans and we have emotions. And when we win something, it's not even about the money this time, but it's about being right. When you find out that you're correct, you get to feel good about it. You get to feel excited about it. The moment you start to see yourself feeling too good, see yourself feeling excited, cool off. Get out of the charts at that point. No need. There's no reason for you to be on the charts at that point. There is no reason for you to keep trading because you're happy. Happiness, like I don't think in my entire life I've ever seen different types of happiness before. Like when you guys think about it, is there a different type of happiness? Like happiness is happiness, isn't it? I'm not sure there's a different kind of happiness. Like, is there a different type of happy? Or are there types of being happy? I don't think so. So why I'm saying that is because I don't think there's anything that's going to make you feel better than you've just felt from that win. Like, what else do you want? You're still, this feeling you're feeling right now from this win. If you win the next one, it's still going to be the same feeling. Right? But you putting yourself in that emotional state to now go for the next one, and maybe at that point you're feeling like a god, and you feel like you've cracked the whole thing, and now you feel like you can risk 10% because you have it in your mind it's gonna go right, and then you end up taking one shitty trade. You might not even use stop loss at that point, and you tell yourself, okay, you know what, I'm gonna use a mental stop loss, and it just dumps someone's sweet stuff. And I saw someone the other day. Someone said how she lost £1,200 trading gold, and she was 400 pips in drawdown. Like How do you put yourself? Well, anyways, I think I've been there before, anyways, so I wouldn't try to judge anyone in this, but because it happened to me as well. But that's something that's crazy because it makes no sense. Like you not using the stop loss and you telling yourself you're using the mental stop loss is you risking 100% of your account. I don't know if you guys know that. But when you don't use the stop loss, you're risking your whole account, right? And that's like just out of the world. That's like no discipline at all. But that's another topic entirely, anyways. But it's just you understanding that your wins matter, and when they matter, just chill, cool off, and when you feel like you have dampened that excitement, you're now back to your normal feeling where you're not really expect anything. You can now jump back on the chart and then have another look again, have a go at another trade. At that point, your emotional state of mind is now balanced, right? Um, I think of speaking about passions. Okay, so let me just talk about passions now. So when do you take passions? That's another thing that a lot of people find difficult. Okay, so for me, the way I take passions is like this: 10%, 30%, 20%, 20%. That is 10, 40, 60. Yeah, 20%. So I believe if you add all of this, that's 100%. Now, this is done when I have like a long term trade. Let's say 2 day trade or 3 days, something I'm willing to hold for the next 3 days or maybe during the week. Now, when the move starts, the first place I take partial is at the break of structure on a 15-minute time frame. The moment I see a break of structure happen in 15-minute time frame, I take out 10% of the full position, right? And then I let the rest run. Now, when it gets to my TP1, which usually is around the 1 hour target structure point, I close 30% because now I know that that is now a lower low and I'm off 40% of my account of the trade. Okay. So the rest 20% are then split by watching price action at this point. So right at that point, I was going to see, is price going to drop down? Is it going to continue? If I start to see signs that's not going to come, it's not going to continue to go down, I close another 20%. So that's how I kind of like split. All right. Let me give you guys an example with a pair. That would be GBJPY actually. Let me bring GG on this. So there was that buy that I took from around here. So I took a buy from somewhere around here. And the first time I took 10% was when we broke this high. Okay. Now when the high was broken, I saw a huge push to the upside. Now the price action here told me that we're still bullish, right? So what happened was when this sell happened around here, just when the sell happened around here, I closed off another 30%. Now the reason being, because what if price drops back down? Because price hit a supply level actually, somewhere around there. So what if price decides to drop back down? Maybe do like a pullback to the structure point. Okay, so that's why I take out 30% up, and now I'm off 40%, and I let the loss run. So price go here again, which was 139.600 if I remember. That was where I took the next 20. Okay, so at this point I had 10, 30, 40, which is what 60%. Okay, so I had 60% of this move, and that was it. So when I had 60%, 60% is good enough partials take out of this move. We had like 300 pips in that move, or about 400 pips, yeah, in that move, and that was okay for me. So I just had to let the rest 40% run from my entry right here, right, and see if just as I'm looking at the higher time frames and I'm starting to see that we are higher, high, higher, high, higher, high. What if we also get higher, high? And that's why I'm just leaving the trade at this point. The moment I'm going to close the rest 40% is when we start to break this low, right? Probably would just exit the market at that point and then see maybe even if it's going to continue, then maybe I'm just going to catch another buy again at that point. So that's how I kind of like to understand how to take passions. It's something that you would get to learn with time. It's not something that you actually learn on this call. In a way, something that you're going to experience yourself. I'm just giving you guys a guide, uh, based on what I do personally myself and how I do it. So that's partials, for me basically. The next is securing risk. Now, this securing risk is very simple. You secure risk when you're in a trade that you're not really sure about. Right? There are trades that we feel like, oh, this trade is gonna go, it's gonna bang. Or there are trades like that. Like for example, the gold shot from 1875. That was something I knew that was gonna happen. So I wouldn't really want to be secure risk. Now, what I mean by securing risk is, we have 1% risk on every trade we take, right? Now, supposing I take a trade. Let's say, for example, I take a trade. This was my point of interest, right? And price got my point of interest, broke structure, did everything I wanted, and then I go into a trade. And then the trade starts to go in my direction. But this trade, I'm not really sure of it, especially when it's a counter trend trade as well, right? So in a counter trend trade, I'm not really sure about if it's going to hold. At that point, when I see that it has gone in my favor, I close out my risk that I put into the market in the first place. So if I had $10, um, let's say I had $10 for a risk on this trade, right? 1%, let's say 1% on this trade. Now, the $10 that I had, if price goes in my direction and give me $10, opportunity to take out $10, I'm going to take it out. So that even if it comes back and takes me out, that's fine. I'm at break even because I already took out my risk involved in the trade. Does that make sense? Okay. So that is like everything in a nutshell, basically about trade executions. So I hope that kind of like this maybe added something, um, for you guys.